Right now, the cryptocurrency market operates in a regulatory gray area. These erratic data streams represent a landscape vulnerable to manipulation and front-running, leaving the 67 million Americans who hold digital assets with almost no legal recourse. To address this, lawmakers in Washington are finalizing a comprehensive bipartisan legislative framework known as the Clarity Act. The bill aims to replace the slow, manual layers of traditional clearinghouses with automated blockchain protocols. By enabling near-instant settlement, the industry expects transaction speeds to increase, while the costs currently paid to banking intermediaries fall towards zero. After a year of negotiations following its passage in the House, the bill is finally approaching a Senate vote. But just as it reaches the finish line, it has encountered a sudden and coordinated wall of opposition. To survive, the crypto industry can no longer rely on technological arguments alone. They are now forced to fight a war on two entirely different fronts simultaneously. The passage of the Clarity Act has become a struggle against partisan election year politics in Washington and the preservation of legacy banking monopolies on Wall Street. The first front is located here, in the Senate, where a sudden legislative hurdle has stalled the bill's momentum. A group of Senate Democrats is demanding the inclusion of stringent ethics language. They want to ensure that the president and his immediate family are legally barred from profiting from crypto-related businesses. This creates a political deadlock. If the ethics rules are written to specifically target Donald Trump, he has signaled that he will veto the entire Clarity Act, effectively killing the bill. A proposed compromise is now on the table: universal ethics regulations that apply equally to the president and every member of Congress. This art of the deal compromise provides Democrats the oversight they want, while creating a framework the president can accept without a veto. This front highlights a difficult reality. The primary obstacle to modernizing finance is often the personal political stakes of those writing the rules. The second front moves the battle from the Senate floor to the headquarters of the nation's largest legacy banks. This conflict centers on last year's Genius Act, which established the rules for stablecoins, digital tokens pegged to the value of the US dollar. Crypto platforms intend to use this technology to pay financial yields and rewards directly to the American consumers who hold these tokens. Megabanks, led by figures like Jamie Dimon, are fighting to block this. They argue that crypto companies are functioning as unregulated banks and should be subject to the same restrictive compliance costs. Traditional banks use fractional reserve banking, keeping a small percentage of your cash in the vaults and lending the rest. Stablecoins, however, are backed one-to-one. For every digital dollar, the company must hold a full dollar in U.S. Treasuries, making fractional reserve risks impossible. The big banks are currently reporting record-breaking profits. Their opposition is a strategic move to prevent a technological shift that would give consumers higher yields and threaten their corporate margins. Legacy institutions are leveraging their political influence to maintain their exclusive monopoly over how American capital is stored and moved. Both of these fronts are now converging as lawmakers enter a critical phase to pass the Clarity Act before the August recess. Success depends on a dual victory: finalizing the universal ethics compromise in Washington while simultaneously blocking Wall Street's anti-stablecoin lobbying. Failure would leave 67 million Americans without federal consumer protections, while the national financial system remains reliant on settlement protocols that are decades old. If the bill passes, it would provide the regulatory green light for institutional capital to flow into the sector, integrating crypto technology directly into mainstream banking. This legislative battle is a legacy-making moment. The decisions made in the coming weeks will determine the very definition of money and banking for the next generation. The final outcome of this unprecedented two-front war will dictate exactly how your money moves in the 21st century.